Good evening, traders. In today's video, we're going to talk about the order blocks. We are going to test different indicators. Some are paid, some are free. So let's jump into the indicators. This is a gold futures chart. So first, I want to start with the best indicator that in my opinion, it's the best indicator. It is paid though. It's from Lux Algo. So we will click on this and then we are going to see all the order blocks. Okay, now in this it tells you it gives you the value. This value is basically how many orders are in this level. If the order blocks are green, this is support level, or this is the buyer's order block. If the order block is red, this is the seller's order block. So as you see it here at this level, um, the market came down to this level, tested this level, so there was a lot of buyers active at this level. So and this level is still valid. So if the market comes down to this level, it uh, more chances are it will a lot of buyers will jump in at this level here, and then the market will go back up. If we see the candle closing below the order block, that means this order block is not valid anymore, so we can open a sell position from here. Now if you can see it in the current market, um, market was at the sellers order block, so there was a lot of sellers interested to sell in this area. So once they started to sell, the market started to came down, and then it came down to the buyers order block. Now you started to see the bottom wicks, so this means the buyers are more active here than sellers. So they're stopping the sellers to take the market down more. So now I am going to move it down to the lower time frame, for example 5 minute. So now at the 5 minute you will see more order blocks. So any order block, this is any order block have a bigger than 20% here is considered a strong order block. So now here this one says 38%, and then 9.121k buyers are here. So now they're holding the market here. They're not letting the market drop lower than this, and you see a good bullish candle close above this. So in this scenario, what you can do is you can open a long position. um, Here your stop loss is going to be just below this, and you can target the next order block. So this will give you 1 ratio 1.35. Okay, now if it breaks this order block, then you can go for the next one. So you can go from order block to order block. So let's see here. Okay, so this was the seller's order block. So for the seller's order block, when the market came down, when you see the candle, a good bearish candle closing below the order block, you can open a short position here. Your stop loss is going to be just above the order block, and then you can target 1 ratio 1 or 1 ratio 1.5 or 1 ratio 2 even. So but this one went down to 1 ratio 4, more than 1 ratio 4.51. Okay, so these are the paid order blocks that you have to get it from Lux Algo. If you want to use the free order blocks, then we can also find some free indicators. So let's just see it here. Okay, so now here you see the free order blocks, and as you see, this is the yellow color indicates the seller's order block, and then the green color is for the buyer for the buyer's order block. So if you see it here, when this candle form and these two candle, same scenario, market a candle closes below the order block, you can open a sell position here. Now if you see it on the naked chart, so market went down, came back up. Now this is a resistance here. Okay, so it came down, went back up, tested this level, came down, tested this level again, came down, tested this level again, and then this level is holding the market. So this is a resistance level. A lot of sellers are interested to sell in this level. So now you can see if the market comes back up, um, chances are it will test and then drop it from here again. So same thing here, as once you start seeing the more and more order blocks forming, then you know when to trade and when not to trade. um, we also have the order blocks in our indicator, which is the quick pips. It's also paid version. In quick pips you also get a breakers block basically. So what the breaker blocks are, the breaker blocks are, it's a support level, but when the support level breaks, it turns into a resistance level. So for example here, if you see there was a support here, market went up, came down, tested this level, went back up, came down, tested the level, got the support from here, then went up. Now it came down here, it stayed in the order block, and candle closes below the order block. So basically it breaks the support level. Now this support level is going to become a resistance. So now as you can see, market came down, went up. Now this was the support previously. Now since the candles are below it, now it becomes a resistance. So market came down, tested this order block. At this level you can see it's a yesterday low, and there is a order block, so you can see this is a strong level. So it came down and now it's getting rejection from here. So now when the market goes up to this level, now this level becomes the resistance. So we have to be careful when the market go up to this level, and then we will wait. If we see a breakout, then we will go for buy. If we see the rejection, we can sell here and then wait for this level as a TP. So this is the basic, very basic about the order blocks. If you need to know anything more about the order blocks, for example here, market came down, tested the order block, and then if you would have opened a buy position here, so as soon the candle closes above this, you can enter, and your stop loss is going to be below the order block, just below the order block. So this one gives almost 1:5, almost 1:5. Okay, very close to it. So this is how you can target the order block to order block. If it's a support level, candle, a good bullish candle closing above the order block, you can open a long position, and you can wait until the next order block. And if it breaks down, then you can open the sell position, and vice versa. So there are so many order blocks, there are so many free indicators. You can pick your own. Just spend some time on it, make sure you master it, you understand what the order blocks are. Again, if you want to go with the Lux algo, they are a little bit more expensive. If you want to go with quick pips also gives you the trend clouds. So this can help you a lot with identifying which side the trend is, and when to hold the trade, when to enter, when to exit, and all that. So as soon you see the candle closing above the cloud, now you have the confirmation that the market is coming from the order block. Okay, and it's closing above the cloud, so you can buy it here. Your stop loss is going to be below this wick, and then you can target good profit here. I hope this video helps. If any questions, please leave the questions in the comment, and I will answer them.